Hi, I'm David Daughtry from Copperwynd Financial. A few weeks ago, we had a Dave's Talk where we talked about the coronavirus and would it have an impact. How little did we know at the time what it would do to the global economy. We're seeing over the last 3 weeks sort of the fastest decline in the market from a peak into a bear market that we've ever seen. The only other time that it went faster was really looking at 1987 when the S&P dropped 22.5% in a day. What we're looking at is something that scares the market because it's not an economic thing that is causing this. It's a health issue that is causing concern about the economic impact. We're seeing lockdowns in California, in New York, around the world. It's clearly going to cause a global recession and a recession here in the US also. The question is, how quickly do we get out of it? Now, this is where it is hard to judge simply because in all the other economic downturns, it was caused by the Fed raising rates, unemployment rate jumping up, economy slowing, oil price impact. This is something completely different. The banks are in great shape. Consumers, before they got laid off, or will get laid off on some of them, are in great shape. Housing market's in great shape. Everything was great until this. You're going to see some very bad numbers come out from first-time claims for unemployment, number of people laid off, unemployment rates. But coming out of this, I think 12 months from now, I think we'll be fine. It could get really ugly between now and then because markets don't like uncertainty, and this is an uncertainty on the health side that is not quantifiable as far as how it comes out because there's no real comparable time that we can look at. 1918, the flu pandemic, yes, but nobody was really trading in the stock market at the time, and we were coming out of World War I. So this is completely different. Do I think long term this dramatically hurts the economy globally? No, I don't. In the short run, it's very uncertain. So we're being more cautious here, but we're not throwing everything out. We're looking and saying, the Fed is printing trillions of dollars and all central banks are pushing a lot of money in. The federal government's going to be pushing a lot of money in. And so we'll see the interaction between bad economic data that seems temporary and what the Federal Reserve and the federal government and state governments are going to be able to do. We are concerned. It's something that's unknown, but I think we'll come out of this quite well. 6, 12, 18, 24 months from now, we'll look back and say, yeah, we got through that. But it may be painful before we do. Thank you very much.